Okay, we have another down day with the market. The Walmart earnings weighing on the market a little bit here. I have the Dow down. The Dow was down 153 points, down 0.34%. Walmart was down 4.5%, weighing on the market a little bit and the retail sector. The S&P was down 0.40%, down almost 26 points to close at 6370. The NASDAQ was down 0.34%. Candles of indecision, spinning top candlesticks on S&P and NASDAQ. The Russell was actually up 0.21%. The VIX rose by 5.80%, rising nearly a point to just over 16.5. I talked about yesterday how on social media the herd is convinced we're going to get the cut. They say this at every single meeting. We're now going to get the cut. And it was all the economy is so good, the Fed now has to cut. Now it's the economy's bad and the Fed has to cut because of the jobs report. So no matter whether the economy is good or bad, the Fed has to cut according to the herd. It's absolutely incredible. I mean, these people are a piece of work. After the jobs report with the CPI, again, we saw the percentage odds of a rate cut at 98%. It ended up dropping back down. It's continuing to drop. You got the FOMC minutes yesterday. The Fed's concerned about the inflation, and they're concerned about Trump's tariffs, the impact there, and concerned about the labor market with the revisions downward. We'll see what those revisions come in at. Eventually, we are going to get negative jobs. The recession is coming. We'll get it just before the recession or as the recession's kicking off. But those were dramatic revisions that we saw. Will they be changed? So we'll be watching as we get the next jobs report. Continue to say again, we saw the PPI wholesale inflation jump by the largest amount 3 years. People dismiss the inflation report. Oh, it's a service sector and all this other stuff. I'm telling you, eventually inflation's going higher. I've already predicted a bottom for it with the CPI, and now we're getting the higher low with the PPI. It's ticking back up. It's all going to be blamed on the tariffs, and I think eventually you're going to get an inflation freakout. Now, again, we're going to get Powell tomorrow. Before I talk about that, another Fed official showing hesitation about the widely expected September rate cut. Again, what reason is there for the Fed to cut? You got the Kansas City Fed president saying that, hey, there's more work to be done on inflation. He's showing hesitation about the widely expected rate cut. Regarding the rate cut, I think we'll get two possibilities. Either Powell's under so much pressure from Trump to cut rates, market's dying for it. Do they throw the market and Trump a bone, do one cut, and wait some more? Now that would be the only reason why I would see Powell and the Fed cutting. Powell's under an enormous amount of pressure right now. If he caves, maybe he does it. I don't know if he caves. I don't think so, because he's scared to death of Trump's tariffs causing inflation. Right now, he could do, I told you so, as we're seeing the inflation data begin to tick back up. The other thing is we could see the September cut canceled, as I think is going to end up happening. I'm going to focus more on the inflation, concerns about Trump's tariffs, inflation data ticking back up. I think that is reason to have the Fed wait on the sidelines, which is what I've said I think is going to happen. The only way I think we get a cut out of the Fed is if Powell caves under all this pressure. Anybody can cave under the amount of pressure this guy's under. He's under a lot of pressure. I think he's really worried about Trump's tariffs causing inflation. My guess is he's not going to cave, but anybody can cave with that amount of pressure. This is going to be Powell's last speech at Jackson Hole as Fed chair. Now, the market has had a pretty good sell-off here ahead of this. We'll see what happens. We did get a candle of indecision. We're pretty far away from the 10-period moving average on the NASDAQ, so we'll be watching to see what happens. Even if we end up rallying back up with Powell's speech, if he does take a hawkish tone, more or less officially canceling the September rate cut, even if we rallied, there could be a delayed reaction because we've had a sell-off here going into Powell's speech. Do keep that in mind. After Fed days, sometimes you don't see a rally or a sell-off until after. There's sometimes a delayed reaction. There could be here as well. But again, with Powell's speech tomorrow, we're going to be data dependent in waiting for further information, or it's going to be that he takes that hawkish tone, which he had done recently with the Fed press conference. Again, dashed hopes of the September cut there. Does he do it again here? My guess is he will, but possibility is he takes that wait and see, we're data dependent, and all the rest of the stuff they like to say. NASDAQ 100 down. We have a September rate cut drop. It was at 98% at one point. Now dropping back to the high 90s and the 80s that I showed you yesterday. Now we're at 75%. No cut with October. Less than a 50% chance of a cut in December. Again, I think that we're going to end up getting the Fed cutting, doing jumbo cuts when the market makes new highs and begins to tank. That's what's happened in history. I think it will happen again. But like I keep saying, the Fed is often late figuring this stuff out. May not get a cut until December, maybe on into January. February, early into the year, the market peaks and begins to sell off. The Fed isn't going to panic until we see the market begin to collapse. Then they're going to panic. But now it's down to 75%. I still think Powell's going to end up canceling the September cut with the speech tomorrow, but I could be wrong because I think he's going to take a hawkish tone. But that's just my opinion. I think eventually the cut will be canceled unless Powell caves under pressure from President Trump. He's under a lot of pressure right now. The S&P got a bottoming tail yesterday. It was not confirmed. The VIX got a topping tail at the 50 period. It was not confirmed. Rallying back up. VIX tried to get back above the 50. That's a green line you see right there. It didn't close above it. If the VIX can get back above the 50-day moving average, volatility will increase on the S&P 500. With today's move, look what's happening. The RSI is getting back above 50. So again, I still think the September cut is going to get canceled. I still think we're going to get the volatility, as I said over the weekend, that I think that Trump and Powell are going to rattle the market. So far, Trump has. If Powell does the same, and I don't think Trump's done, because I think either this week or next week we get more of Trump's tariff news to rattle the market with the semiconductor tariffs. If Powell, we'll see if I'm right about Powell or not, but you'll have the 50, the RSI getting above 50. You have the bullish cross here, the histogram turning back into positive territory, completing this multiple point divergence, and you have the stochastic breaking above 20 here on the VIX. So again, I think you're going to end up popping above 50, and I think we'll see volatility sharply increase. Let me be clear again. I think this is only a pullback. I do not think we're going down to take out the April lows. I called that April bottom, predicted the rally to new highs. Told you I think we get a pullback here, and I still think we go higher. I'm still bullish in that I think we go to 6,700 on the S&P. Maybe a little higher, a little bit lower, but right around that area of 6,700 or so. Now, we saw momentum shift today on the S&P 500. We got a reversal of conditions. We got the momentum line turning bearish. We already have the bearish signals, the momentum and the trend signals with the NASDAQ topped a week and a half ago. Now we're seeing the S&P, which peaked last Friday. Now we're seeing the S&P follow suit, and the momentum line turns bearish here. We saw the divergence. We saw the divergence develop with indicators, the oscillator, the MACD, the RSI, and even here with momentum, and it's gone negative. So again, we're likely going to get a bigger sell-off than what we've seen so far, but I do believe that it's a pullback and the rally will resume once it's done. We had momentum shift today for the S&P 500. Couple of my trending signals are turning bearish. Others are not yet there. Again, sometimes the trending signals turn with momentum. Other times they do it just after. Right here, the trending signal is turning. Well, momentum shifted. Some of the trending signals have not turned yet. I'll go through a few of them for you. Here we're still hanging in there. Please support the channel with the link directly below that allows me to be able to provide you this information. If you like the charts, you like the indicators, please let me know that by supporting the channel today. If you take a moment to do that, I would really, really appreciate it. Other YouTube channels make their money through sponsors. I choose not to do that. I don't want to sell you anything. I just ask that you help out, do what you can, and partner with me. Please consider following the link below, and it'll take you to a secured site. You can donate any amount you want or make it a recurring donation. If you do that, I thank you. I thank you for your consideration for that. With momentum shifting, going to be watching to see if some of these signals trending signals now start turning bearish. A couple of them are, but a lot of them have not yet turned bearish. I'll be watching to see if they do. They have to validate. If we're now selling out, they have to validate it. The momentum shifted today, and I got a couple of signals that have turned, a couple of trending signals that have turned bearish, but others are still bullish. They need to validate if we're going to have a bigger sell-up by turning bearish. Because what really happened by forming a divergence on the RSI is our rising wedge just evolved into a larger rising wedge, which is now broken down. If we attempt to rally, we can back test it, but if we break down, then we'll see a lot of the trending signals turn bearish. A couple have. Here we still have blue bars. Again, a good majority of the trending signals are still bullish. With the bearish momentum, they could turn right after, maybe tomorrow or early next week. I've had a couple turn bearish yesterday and today, and others are still hanging in there here. Things flipping back to bearish, a few other indicators. So with momentum flipping, kind of a mixed bag. Again, here, some signals starting to turn bearish, other signals not yet there. And signals mixed. The cloud is turning bearish here, but I still have green bars. And the line here is blue, still blue, representing the momentum. The trend turning back to neutral. We had a sell signal. We turned off the upper Bollinger Band. Again, here bars starting to turn red, but the cloud, the background, they're still green. Line still green. So again, got to be watching. See if more signals start turning bearish. Got a mixed bag. Got that warning sign of a possible top or pullback here at the Friday high. So far that's playing out. Bars are turning back to red today here. If the S&P tries to back test or rally towards the 10 period to back test, we might buy a little bit more time. But if we see more bearish signals tomorrow, we see Powell rattle the market, canceling the September cut. Watching, do we move into a risk-off environment, and does the S&P trend turn bearish? Right now, they're still hanging in there. The risk-on is doing what other indicators are doing. That's diverging with the S&P 500. S&P made a new high. It did not make a new low. We could move back into a risk-on environment tomorrow or on into next week somewhere. On Monday, I warned you about that 9 count sitting up. I told you it would sit up over the weekend. It ended up doing that. 8 bar was the high of the count. It is a perfected signal, and so far it is playing out. The 9 count over here, we went a little bit higher, and it played out here. The 9 count produced the immediate reversal. Sometimes you go a little higher. Sometimes you get the immediate reversal. Over here, we got it. A little bit of a pullback going sideways. The 9 count did play out and is playing out. The 9 count formed as we were slamming into this resistance trend line from the 2023 low, connected to the summer low in 2024. We slammed into it in July, and then we slammed into it at the July 31st peak, and then we slammed into it again on August 15th, just over 2 weeks later. And the diversions on the RSI, and we've turned down off that. I think we're coming back into somewhere probably between the 50 and the 200 for a higher low. Then I think we're going to move to try to take out that trend line, finish the blow off top. Nearly 0.5% today, down about 109 points or so. Got a candle of indecision. This could be a continuation or a reversal bar. We're getting very far away from the 10-period moving average. We've dropped 4.30% in the last 7 trading sessions. So in the last week and a half, we've now dropped 4.30%. If we see this low hold, we could try to rally towards the 10 or go down and test our 50, which is down here, and then try to get some kind of rebound. The 10 is still not crossed below the 20-period moving average, but we've had a sell-off ahead of Powell here. We attempt to rebound with him. But we saw further, does Powell come off very hawkish, actually canceling the September cut right here and now? Does he take more of that wait-and-see approach as I talked about? I think one of those two things, I told you I'm leaning towards him canceling it as I predicted would happen last week. I predicted that we get Trump's tariffs and he'd rattle the market this week and next week. We did get some of Trump's tariffs earlier in the week. The semiconductor tariff announcement's coming. We already got the steel and aluminum announcement earlier in the week. I told you last week, over the weekend, that Powell and Trump would end up rattling markets. Trump has done his part so far. Now I'm waiting for Powell to do his part. Even if Powell takes a neutral stance and the wait-and-see approach, Trump's going to come out with these semiconductor tariffs either before the weekend's here or next week in all likelihood to rattle markets further. We're going to get the Nvidia earnings next week. I think it's Wednesday. Watching, is this a continuation spinning top candle of indecision that we go lower before getting any kind of rebound back up, or do we try to get one right here and now? If you do get it right here and now, we do have our 10 and 20 period directly overhead, and again the cloud has turned the momentum cloud. The cloud has turned red into the future. We have had a significant sell-off on NASDAQ, dropping 4.30%, having the diversions played out in our daily time frame. That divergence on the MACD, we got another reference point of a divergence. Now, NASDAQ's dropped 4.30%, S&P less than that. NASDAQ peaked before the S&P on August 13th here with this black candlestick above our upper Bollinger Band, and then we closed back below it and we saw this happen. We're below the 10 and 20 period. If we rally back up, again, they could see a cross with the rally or go lower and try to rally back up to them as they cross. It can play out either way. You got a candle of indecision. We got a bottoming tail yesterday, and I told you those candles are meaningless unless they get confirmation. Again, we got a bottoming tail on Bitcoin, and it didn't get confirmation, and it's moving to a new low now, new recent low. And I told you candlestick have to get confirmed if to mean anything, and even if it were to get confirmed, it could just be just a counter trend, as I've said yesterday. Signals continue to play out. NASDAQ signals are all bearish. Now we're seeing S&P signals starting to turn bearish here today. Today we broke the 50 level here on the RSI on the NASDAQ. We're watching to see, is the candle of indecision give us a short-term rebound for maybe a counter trend here back towards the 10 period, or is it a continuation bar that takes us towards our 50 period down here and maybe back here to fill the gap? Right over here, we hit the August 1st low, we gapped higher. Do we end up trying to fill that gap and reach our 50 period moving average here on NASDAQ? NASDAQ now 4.30%. S&P has dropped 2.20% so far from Friday's high. Now remember, NASDAQ peaked with this bar on Wednesday. Friday the 15th, the S&P went slightly higher on an intraday basis, but then reversed. And again, now we get a candle of indecision. We had candles of indecision over here. That was a continuation, spinning top candle of indecision. What's this one? Do we get a bounce or do we get a continuation to the downside? Well, NASDAQ is sold off by 4.30%. S&P less than that at 2.20%. We've seen a tech sell-off. We've seen the diversions play out. We went above the July 31st high right here, and we went up above that for 5 trading sessions, broke back below it, and only went up by 0.64% on a closing basis, only 0.85 above this level on an intraday basis, only to form this divergence, and now we're turning back down. Just below the 20 period. We lost the 10 period already. Now we're losing the 20 period. We tried to take out the 20 period yesterday. We couldn't do it. Now we are doing it today. Got that another reference point of a divergence on the MACD. And again, these MACDs are rolling over. So we'll see. Do we try to get a bounce surrounding Powell with these candles of indecision, or is it a continuation and we end up going lower before we attempt any kind of meaningful rebound? Even if Powell comes off hawkish, again, the market is sold off ahead of Powell. There might be a delayed reaction. Even if he comes off hawkish, still might take a neutral wait-and-see stance. Eventually, the September cut is going to be canceled unless Powell caves to Trump and the market. The market wants those cuts. They believe that they're really bullish. The Fed's going to cut. We're going to just move into, and Trump believes the same thing. We're going to get these rate cuts and we're going to move into this golden age. If you study history, the rate cuts are associated with bear markets and recessions. The rate cuts and the stimulus there in 2020 had a recession, but it was papered over. That was an outlier. The market tanks and we start moving towards recession. What are they going to do? Start passing out checks again? They can't. It gave us the inflation where the CPI rose to 9%. That's because the government did deficit spending, and the Fed, their QE, that's also inflationary. I always say tariffs don't cause inflation. Tariffs cause some prices to go up, other prices to go down. It's a one-time price increase on some things. Inflation is when all things rise. It's caused by an increase there in the money supply or things like government deficit spending, Fed's QE. So we'll see what happens. But we got these candles of indecision. 50 periods way down here on the S&P 500. Divergence is playing out and giving us this sell-off. Bearish reversal conditions with momentum for NASDAQ. We had that take place on Tuesday. You see the little red arrow, the little red bar, and that flipped the cloud. We closed back below it. We pushed back down below the July 31st high after being above it for 5 days. Day 6, we turned right back down, only to form divergences on the RSI and another reference point here on the MACD and the Awesome Oscillator. We've had a significant sell-off. If we do attempt to rebound here just above our 50-period moving average, we could rally back towards the 10, still have the bearish reversal conditions, but we could get a rally back up. Sold off ahead of Powell, so it's still possible we rally with him. Again, I believe eventually the September cut will be canceled. It could be tomorrow. Powell takes a hawkish tone. I believe that's going to be the case, but I could be wrong. I'm telling you my personal opinion. I was right about Trump and the tariffs this week. Right about the inflation data ticking back up last week. We'll see if I'm right about Powell or not. Regardless of whether what kind of tone he takes here, I still think you're not going to get that September cut. I think it will be canceled unless Powell caves. I told you the S&P was going to join the NASDAQ, and seeing the momentum shift, we got that today. We got the bottoming tail yesterday. I made a joke on my thumbnail yesterday. I said a bottoming tail. Off's over. That was quick. If you listen to the video, if you watched it, you know that I still think there's more downside. I think we're headed down towards the 50 or the 200 or maybe somewhere in between here with our moving averages. Had a bottoming tail yesterday. It was not confirmed. Bitcoin had a bottoming tail a few days ago. It was not confirmed, and it's moving to new lows. Got a bearish reversal of conditions. You see the little red bar. We got one yesterday. Now we have another one today. You see the little red arrow. We're below the 10-period moving average. Closed below the cloud. So the cloud is now flipping. Tomorrow you'll see it be red. It's flipping. It flipped back over here. Now we turned down. We went back up to get another reference point of a divergence on the Awesome Oscillator and to form a new divergence on the RSI. Nevertheless, I told you the S&P was likely going to get a bearish reversal of conditions this week. As we already had it on the NASDAQ a couple of days ago, the S&P is now getting it. Tried to get it yesterday, it couldn't do it, but getting it today. We closed below the lower band and that 20-period moving average now. That officially shifts momentum to bearish. If we do attempt to rally back up, the S&P could rally all the way back up to the upper portion of the cloud, all the way back up here, and still have a bearish signal. So do keep that in mind. If we rally back up towards the 10 period, try to get back above the 20 here, rally up towards the 10 with Powell, try to rally up towards the upper boundary of the cloud, you can get a big rally and still have the momentum signal have still a bearish signal on it. So do keep that in mind even if we do try to rally with Powell. Because as I've said, we're selling off ahead of Powell. We have candles of indecision. Does the sell-off continue? End up being right about Powell canceling the cut with the speech, or does the market rally and Powell doesn't take such a hawkish tone, attempt to rebound, and then maybe sell off later with more Trump semiconductor tariffs or Nvidia earnings or something like that? How it plays out. But again, told you what I think. I could be wrong. Nvidia got that bottoming tail yesterday, and here is the daily chart. And Nvidia was down 0.25% today. We got that reversal of conditions 3 sessions ago. NASDAQ's got it, Nvidia's got it. They both had bottoming tails. It didn't get confirmed today. We were still down. NASDAQ was still down. We've had a bullish signal all the way up here after the higher low setup after the April low. Now we're seeing it turn bearish, turning off of we reached just under major resistance. I talked about in the weekly time frame. So we'll be watching the signal's bearish, the momentum's bearish. We broke the trend line Nvidia. So again, doors now open for a bigger sell-off for Nvidia and for stock market. Keep in mind, NASDAQ's already dropped 4.30%. It's just above the 50. Nvidia, we might test these 50s, come down and take them out or something before we get a meaningful bounce, but we've had a big drop on NASDAQ. That doesn't mean we can't drop further. We have had a big drop going into Powell's speech, so it's just something to be pondering. Still think Powell's going to cancel the cut for September, and I still think he's going to come off hawkish, but I could be completely wrong. Just my opinion. We've had that peak of August 15th. We had a divergence develop on indicators intraday on the daily chart with the RSI. got a black candlestick. We sold off, up taking out the 200, the 50 dropped below it, and it's still below it. Here we got a rising wedge rally, our bottoming tail off of yesterday's lows, and that gave us a rally into the 200 period. We got a gap down today, tried to go back, fill the gap, failed to do it, and then sold off. Had a lot of chop, moved down to a lower low than our opening lows there, and then was just above those lows, still holding above this level. Do we now go take this out, or do we rebound, attempt to get back above the 200? If we do, the 50's got to get back above the 200, then you can rally towards 10-period moving averages for a test. If we remain below 200, or if we get back above it and it fails, you come back and fill the gap and test this level and end up a rally that fails and you drop back below with Powell. Again, I'll be watching this low and our candle of indecision today. Is that candle of indecision a reversal bar where we get a rebound, counter trend maybe, towards the 10-period moving averages, or is it a continuation to the downside? I'll be watching for clues about that, but I'll be watching the gap fill here. I'll be watching the 200-period moving average. Do we come back and take out this low, or do we try to come back towards the gap and get above our 200? And if we do get above the 200, can we stay above it and get a larger attempted rebound back up? We have had a sell-off going into Powell's speech. So you've got a shot at a rebound because we've sold off for the last 5 sessions, the last 7 sessions on the NASDAQ. So I'll be watching the candles in the daily time frame. Are they continuation candles to the downside or reversal bars where we get a rebound? We had that divergence. Here you can see it on the 15-minute chart. We had it on the intraday charts. We went higher, but then we turned down and we fell below the 50-period moving average. It eventually crossed below the 200 here in the 15-minute time frame, and that's been acting as resistance with our rising wedge back up. We saw that act as resistance, so we stalled right at that area here to close out the session. We rallied up to it and we stalled. You can get above it. Again, we can go back and fill the gap up here, and then if you can clear that level, well, you can try to rally towards the 200 period here in the 5-minute time frame, towards the 10 period in the daily, and you could try to get a counter trend. Again, we've sold off 2.20%. So again, if we do try to get above the cloud, above the 50, then again, I'd be watching this 200 period moving average near the 64.30 area. If we drop back down, you could get a divergence developing, and we might have confirmed a higher low today if we can get an attempted rebound for a recovery, which would likely be a counter trend. But remember, the S&P momentum has turned bearish today, so does the momentum to the downside continue? And we come back and we try to fill this gap. We were just shy of it right there. You got some other gaps, down over here. Do we see another drop? Maybe try to form a divergence before we see any kind of meaningful rebound, or a multiple point divergence before we get a rebound. Same thing with the MACD. We've turned up here, but we're still in negative territory, stalling at our 50, and we're still below the center line on the MACD. Do we see a divergence develop, or do we not? Does it just tank and we go down and take out the low here on the MACD? Don't form a divergence. Well, I think we'll get a bigger sell-off for the market. We've had sell-off the last 5 sessions on the S&P, over the last 7 sessions on the NASDAQ. At some point, we're going to rebound towards the 10-period moving averages for a test. We may go lower first. At some point, we're going to go and test those levels. Do we do it for candles of indecision in the daily time frame or not? So just some things I'm watching. Same thing here, RSI, does it start moving back above 50 and we get a rebound here, back towards the cloud here on the 30-minute chart, or do we go down and end up forming a divergence on the RSI and down here on the MACD? Just some things to be watching. On our 60-minute chart, we're resting right here on the 200-period moving average. We just broke the 20-period. Again, if we start taking out the 200 period, the 50 will eventually cross below the 200 here. If we start moving sharply below the 20 period in the daily, the 10 will eventually cross below the 20 period moving average. Also might set up a divergence here, or a multiple point divergence in our 60-minute time frame. Again, I think S&P and NASDAQ have likely completed wave 3, probably in wave 4, that I think will come back towards the 50 here on the S&P daily, towards the 200, or maybe somewhere in between, towards our cloud here. Maybe this peak over here is where we're going to see a bottom. Possibly the February high is support. and we come back towards that level. So we'll be watching, and you have some gaps along the way. If we are in the wave, primary wave 4, which I think we likely are, again, I think we'll set up a higher low and eventually get the 5, as I've said. And then I think we're going to peak around 6,700, maybe a little higher, maybe 6,800, maybe a little bit lower, 6,600. My targets are the trend lines in the weekly time frame that I've talked about at great length and detail. But we are breaking this trend line, broke this one over here, the rising wedge. It evolved into a larger channel and a larger pattern, and we broke it. But now we need a good push below the momentum cloud here. That's where we're finding support, and we're just under our 20-period moving average. If we rally back up, we can backtest the breakdown, I should say. If we do, we can rally towards that 10-period moving average. So we'll be watching that. If we break down further, then be watching the 50-period moving average. If we break the 20 decisively here, we're just slightly under it, but if we get a solid push below it, solid push under the 200 and the 60-minute chart, you can get a bigger sell-off, and then eventually get the 10 crossing the 20 here, eventually getting the 50 crossing the 200 on the 60-minute chart. Same thing for the 15-minute chart for NASDAQ. Does it end up forming a divergence here? We go lower. We're staying at that cloud and the 50, just like on the S&P 500. Do we get a divergence on the indicators here before all is said and done, and we end up selling off, as I think we will? Likely have Powell taking a hawkish tone and canceling the September cut. We just sold off so much, we're going to attempt to rebound now, and we attempt a counter trend. Again, signals are bearish on the NASDAQ, and S&P is now joining it. Momentum flip today. NASDAQ 60-minute chart is taking out the 200 period. The 50 is still above it, but we're below the cloud here. Again, we've reached an extreme. We're trying to rebound. Do we attempt to get a divergence and go lower? End up getting a cross of the 50 and the 200. The 50 is a green line. The 200 is a black line. Same thing with our moving averages in the daily time frame. The 10 is still above the 20. So do we go lower and drag those shorter term moving averages down below the longer term ones? End up trying to form a divergence or multiple point diversions before we come out, attempt to rebound immediately before another leg down. If we have peak, which I believe we have, Trump's already started to rattle the market. Powell could continue it. If Powell doesn't, again, we're still going to have Trump rattling the market further with his semiconductor tariffs. And again, NASDAQ likely completed wave 3. The black candlestick, we're probably in wave 4, coming down here somewhere, maybe a little bit lower than I have here, maybe a little bit higher. But I think, again, you're probably going to end up taking out the 50-period moving average. Then I think we get that rally going into the end of the year. Maybe we get a peak in September, October, November, December. I'm leaning towards October, November, because the August sell-off was delayed a little bit by 13 days on the NASDAQ.